A financial statement analysis performed by NotebookLM with the latest Gemini model. The companies we're comparing today are two Taiwanese airlines, STARLUX Airlines and EVA Air. And before we dive into the results, let's check out the sources. First of all, we have 3 years of finance reports from both companies. Then we have the thesis and 3 news reports covering the current situation of Taiwanese airlines. And finally, we have these markdown files. These are previous conversations I had with NotebookLM. Take this one for example. I asked it to calculate some financial ratios for me. I have the EPS and the ROE, ROA, etc. We will use them in the later part, which is the video showcase. Now we will watch this video summary together and see how NotebookLM handled this analysis.
All right, let's get right into it. Up in the skies over Taiwan, there's this incredible business drama playing out. You've got an established empire on one side and a bold new challenger on the other. It's a fantastic clash of strategy, finance, and pure ambition that's just fascinating to watch. So, in one corner, we have EVA Air. This airline has been around since 1989. It's a global giant, a key member of the Star Alliance, and it's got a long, proven history of making money. And in the other corner, the newcomer, STARLUX Airlines. It just launched in 2018 with this laser focus on being a luxury carrier, and its growth has been nothing short of explosive. This is the classic tale, the veteran versus the visionary. So, here's our game plan. First, we're going to get to know these two titans, their origin stories. Then we'll crunch some numbers to see how they stack up. After that, we'll dive deep into the financials for the real showdown. We'll break down their competing strategies, and then we'll get to the big question. If you were an investor, which one would you choose?
To really get a handle on where these airlines are headed, you first have to understand where they came from, their history, their DNA. It really defines everything they do today.
EVA Air was born from a shipping powerhouse, the Evergreen Group. Its founder had this really clear philosophy from the get-go: safety first. They didn't build their brand on being flashy. They built it on being incredibly reliable and efficient. They just methodically grew and grew, eventually becoming this global force that joined the prestigious Star Alliance back in 2013.
And then you've got STARLUX, and its story has a little bit of family drama. It was founded by Chang Kuo-wei, who used to be the chairman of, you guessed it, EVA Air. He had this vision for a luxury boutique airline, something totally different. And in what has to be one of the worst timings in business history, their very first flights took off in January 2020, right as the pandemic was about to shut the entire world down. Talk about a tough start.
Okay, so those are the backstories. But how does that translate into their actual operations today? Let's take a look at the numbers and see how they really stack up in terms of pure size.
And right away, the difference is huge. In 2023, EVA Air had a fleet of 87 planes. That's more than 3 times bigger than STARLUX's 26. That kind of scale gives EVA this massive advantage in network flexibility and just sheer capacity for passengers and cargo.
But here's where it gets really interesting. It's not just about how many planes they have, but how they have them. EVA leases a little over half its fleet. STARLUX, a whopping 96% of its planes are leased. This is a classic startup move. It lets you grow super fast without spending a ton of cash up front. It keeps your books looking lean, but it also means you have these big, fixed lease payments every month. It's a double-edged sword that creates a lot of risk and reward.
All right, now for the main event, especially for all you finance buffs out there. We've seen the scale. Now let's follow the money. It's time to pull back the curtain on their 2023 income statements.
So, this is the million-dollar question, isn't it? How do these totally different strategies and sizes actually play out on the bottom line? Let's find out.
Wow, these numbers really do tell a story. EVA's revenue just dwarfs STARLUX's. We're talking almost 9 times bigger. But look at that net profit, over $21 billion for EVA and just $149 million for STARLUX.
Now, of course, you have to remember, STARLUX was basically starting from zero during the pandemic, so the fact that they're profitable at all is pretty incredible, and shows just how fast they've grown. But revenue is only one piece of the puzzle. The really interesting part is on the other side of the ledger. Where is all that money going? Looking at their costs, that's where you see the real difference in how these two airlines operate.
Okay, take a look at EVA. For a big, established airline flying long-haul routes, a full third of its costs, boom, fuel. That's just the name of the game when you're flying giant jets across oceans, day in and day out.
But now, look at this. STARLUX's fuel cost is way lower, only 25%. So why is that? Well, it comes down to two big things. First, their fleet is brand new, so the planes are super fuel efficient. And second, they're mostly flying shorter routes around Asia, which just burns less gas. That's a huge structural advantage, baked right into their model.
So why do their financials look so different? Well, it's not by accident. This is all the result of two fundamentally different game plans for how to win in this crazy competitive airline business. EVA's strategy is like a financial fortress. Seriously, the main castle is built on those profitable long-haul flights. But its real strength is the moat around it, all these other businesses, in aircraft maintenance, cargo, catering, you name it. They bring in steady, predictable cash that protects EVA from the crazy ups and downs of just selling plane tickets.
STARLUX, on the other hand, is all about the surgical strike. It's not trying to fight EV everywhere. Instead, it's trying to carve out this very specific, very profitable niche. The whole game is to win over the highest-paying customers with a better, more luxurious experience using aggressive marketing and cool offerings, like a real first-class cabin as its main weapons.
And that first-class cabin is actually a brilliant strategic move. If you look at it through the lens of game theory, it makes perfect sense. By being the first to go all in on a true first-class product, STARLUX made it so the most logical move for their bigger competitors was to do nothing. Why? Because fighting back would mean starting a super expensive price war over a tiny slice of the market. It's just easier for them to let STARLUX have that little corner to itself. It's genius, really.
Okay, so we've gone through the history, the operations, the numbers, and the strategies. It all comes down to this one last question. What does this all mean for you as an investor?
And before we get to the final verdict, I just want to point out that a lot of this analysis is grounded in some really solid academic work, specifically this master's thesis from National Taiwan University. It gives us a great framework for thinking about all this.
At the end of the day, you're looking at two completely different kinds of investments. Think of EVA Air as the stable, blue-chip stock. It has proven profits, a dominant network, and lower risk because it's so diversified. STARLUX is the high-growth play. It's got the potential for huge, rapid gains because of its brand power, but that comes with way more volatility and a lot more risk.
And hey, don't just take my word for it. This is pretty much what the financial analysts say too. To put it simply, EVA is the mature, stable giant. STARLUX has incredible potential, for sure, but that potential is packaged with a much, much higher level of risk. So the choice really comes down to your own style. One company spent decades building an empire through discipline and smart diversification. The other is trying to build a legend overnight through pure vision and disruption. The question for your portfolio is simple. Do you choose the fortress or do you choose the rocket ship?
So NotebookLM did a solid job summarizing the sources. However, this is not the financial statement I expected to see. Let's talk about the good things first. So as I just mentioned, it did a great job summarizing the big picture of both companies' current state, and it has these minimal slides. However, I am expecting more hardcore stuff. For example, more complex graphs showing how these companies changed over the last 3 years. And of course, this thing is made entirely by AI, so I need to do some fact checking about some of the details it said in the video. But overall, if you're doing a financial statement analysis project and you want to start quickly, you can put the sources into NotebookLM, let it do some of the first drafts for you. It's very efficient. And of course, if you're doing some real investments into Taiwanese airlines, I recommend you to find other tools or person that are more suitable than an AI notebook. That's all for today. Thanks for watching.